Farm Credit Illinois values the protection that crop insurance offers to our farm families and their operations. With more than 89% of Illinois corn and soybeans being covered with a revenue protection or an RP policy, our farm credit agents view that as the anchor of your investment. Then the producer can look at what gaps there could be and what additional buy-ups are out there to help mitigate this additional risk. Throughout the video, farm credit agents will highlight additional coverage options to add protection to your base policy. We understand in today's farming environment, your crop insurance policy is not just a policy anymore, but an investment in your operation and in your livelihood.
Quality Loss, or QL, is a new crop insurance option for 2021. Quality Loss replaces post-quality adjusted production with pre-quality adjusted production for those years in which a timely notice of loss is filed. This happens whether an indemnity is paid or not. Quality Loss helps to maintain a higher APH, allowing for increased coverage.
After record early season rainfall in 2019, many farmers benefited from the prevent plant coverage included in their MPCI policy. But did you know there is also a prevent plant buy-up option available on all individual crop insurance plans? Prevent Plant Buy-Up provides an additional 5% payment factor for any acres with a prevented planting claim. 5% may not seem like a lot, but for a minimal investment, it can have a big impact in a year like 2019. Also, new for 2021, to be eligible for prevented planting payments, acreage must have been planted, insured, and harvested, or if not harvested, adjusted for claim purposes in at least one of the 4 most recent crop years. Otherwise, until all requirements are met for 2 consecutive years, the acreage will be considered unavailable for planting. This will be important to be aware of come planting time if we get into some wet cycles again, which lead to prevent plant decisions.
As you know, this past summer, many areas across central Iowa and northern Illinois were hit with strong winds causing damage to their crops. Thanks to enhanced wind coverages, many of these farmers were paid for their losses at the time of the event, not after harvest. Strong wind events can occur any time, and it's best to be one step ahead of that situation. Here at Farm Credit Illinois, we do our best to find the right insurance plan that fits your operation and minimize your risk, and wind coverage can play a significant role in doing just that.
During a dry, windy week of harvesting in the county, multiple large fires originally started by cigarette butts and combine fires quickly spread across fields this fall.
Farmers with a hail policy were paid for losses incurred after losing a large portion of their crops. With a traditional MPCI policy, fires don't trigger a claim unless started by lightning.
Fires started by covered perils are a good investment at minimal cost to add to your normal hail policy.
At a time when protecting the investment you have in the field matters most, supplemental product offerings can provide you peace of mind. Banded products protect up to 95% of your farm's APH, are purchased in conjunction with your MPCI policy, and unlike the federal crop options available, most banded products are based on your actual farm yields and harvested production. A 10% banded product could provide coverage from 85 to 95%. If a claim is triggered within the band of coverage, you will receive an indemnity. Pricing products allow you to leverage market opportunities outside of the price discovery periods established for your MPCI policy by purchasing price intervals at various times of the year. If the purchase interval's price is higher than your MPCI guaranteed price, the supplemental policy provides an additional indemnity in the event of a claim. Supplemental options include banded and pricing products. These allow you to maximize coverage, minimize risk, and leverage market opportunities.
Just getting started in farming? Beginning farmers and ranchers, or BFRs, are eligible for certain benefits designed to help you start your operation. These include paying no policy administration fees and a 10% subsidy increase. The BFR also makes it easier to use another producer's yield history and allows for a higher yield adjustment when replacing low yields in your database. All of these benefits can be applied for a maximum of 5 crop years if you meet the requirements. While these benefits have no age limit, full-time college years and military service can be waived with the proper documentation, allowing your 5 years to start when you're back home. These same benefits apply for veteran farmers and ranchers, or VFRs, when specific requirements are met. Farm Credit Illinois agents can help you with the paperwork so that you're able to take advantage of this opportunity to maximize your policy's risk protection.
If you've ever been frustrated at claim time because your full season bean production and your double crop bean production get thrown together, there's great news for you. Now, the Enterprise by Cropping Practice option, or EC, allows you to keep those separated by cropping practice while still taking advantage of the Enterprise unit subsidy. So even if your full season beans have a great year, your double crop beans could still qualify for a claim.
Replanting is a necessary evil in some crop insurance years. It's easy to take advantage of the replant benefits, including with your RP policy. Notify your Farm Credit Illinois agent and talk to your adjuster before replanting. Extended to the 2021 is the self-cert acre limit of 100 acres per unit. This extension is part of the COVID-19 relief that allows for some flexibility for policy delivery. The extension will also apply to any additional replant endorsements you put in place with your base policy. Don't miss out on replant payments. Phone first.
We think that one of the most exciting changes in crop insurance for 2021 is the addition of the enhanced coverage option, or ECO. ECO follows the coverage of your underlying policy. If you choose yield protection or a yield-based policy, then ECO covers yield loss. If you choose a revenue protection policy, then ECO covers revenue losses. The amount of ECO coverage depends on the liability of your underlying policy. However, ECO differs from the underlying policy in how a loss payment is triggered. The underlying policy pays a loss on an individual basis, and a claim is triggered when you have an individual loss in yield or revenue. ECO pays a loss on an area basis, and a claim is triggered when there is a decrease in the county level yield or revenue. ECO has two trigger levels, 90 and 95%. ECO provides a subsidized band of coverage between the elected trigger level and 86%. If the county yield or revenue is reduced beyond the trigger level, you will receive an ECO claim payment. If the reduction in yield or revenue exceeds the 86% threshold, you will receive a claim payment equal to the full insured liability.
Under the last two farm bills, farmers and landowners are able to choose between 3 different protection programs and at the FSA offices: ARC County, ARC Individual, and PLC. The 2018 Farm Bill allows producers to change these elections annually. Enrollment for the 2021 crop year for ARC and PLC is open now through March 15th. ARC County provides income support directly tied to historical base acres. This program uses county yields rather than individual farm yields. ARC IC, on the other hand, uses a producer's certified yields rather than the county. However, if a producer is looking into selecting that as their option, we want to make sure that they are well rehearsed with all the details and know how that program works. ARC IC is the least popular among the 3 options for corn, soybeans, and wheat.
PLC is a fairly simple product. Payments are triggered when the effective price, most commonly referred to as the marketing year average price, is below a set crop reference price. For example, think of it as a free put the government is offering you relative to the marketing year average. The reference price for corn is $3.70. So if the marketing year average price for corn is $3.69 or less, a payment is triggered. Remember, when considering this option, the marketing year average will not start averaging price until September 1st of 2021 and will run through August 31st of 2022. Farm Credit Illinois agents are happy to discuss these program options in greater detail.
Another option for producers to increase their crop insurance coverage is a plan that was introduced in the 2014 Farm Bill called Supplemental Coverage Option, or SCO. SCO is a county level option that provides additional coverage to 86% above the producer's selected policy coverage. To get a simpler perspective of what that really looks like, picture a mini GRIP, or now called ARP, policy band that sits over the top of your individual coverage or farm policy. It is only available on farms by crop that are in the PLC program at the FSA. Farms by crop that elect ARC County or ARC IC are not eligible to take SCO. A key advantage of SCO is that it is heavily subsidized at a 65% rate. SCO must be selected on your policy by March 15th of this year.
Again, Farm Credit Illinois agents are glad to answer questions about any of these programs we've mentioned here. We take pride in not only being able to work with the federal crop insurance program, but also offer our knowledge and expertise with these important FSA programs.
One thing we can always count on is change. Right now in ag, the markets are on the uptick. February is one important month for Illinois corn and soybean price discovery. The averages are set using each trading day of February. Corn uses the CBOT December futures, and soybeans use the CBOT November futures. The potential of those higher average prices lends itself to higher policy guarantees for 2021. This is a welcome change for producers that have endured recent low prices, hoping for more market opportunity.
Of course, these higher prices and guarantees can result in somewhat higher premiums. However, more so than prices affecting premium, so can and will the added volatility we are seeing with the daily market movements up and down. Volatility has been extremely low for corn and soybean premiums for the past 3 years, and we should be aware this is another potential change for the 2021 crop insurance year. But let's focus on the positives that are currently providing farmers opportunity to not only sell at higher prices, but also to put in place a policy to maximize risk protection.
Farm Credit Illinois crop insurance agents work hard to understand not only the federal crop insurance program, but also increasingly important USDA programs that matter to you. More and more of these government programs are pulling your crop insurance policy information to determine final payments. With so much on the line, it's important that your crop insurance policy be set up right. Questions like, how is your grain sold? How are you set up and certified at the FSA office? What crop insurance coverage levels do you have? All these questions need to be asked and reviewed on an annual basis.
Farm Credit Illinois agents know how important it is to do a thorough review of your policy. Whether it's making sure your policy is set up properly or making sure that you're using your crop insurance investment dollars wisely, our agents are here to help. We can help you build off your base policy and find right products to bridge the coverage gaps and best mitigate the risk for you and your operation. If you haven't already met with your Farm Credit agent, now is the time to do that annual review.
Here are a few important dates for you to remember this renewal season. Sales closing date for corn and soybeans is March 15th. All coverage decisions and policy changes must be made on or before that date. Don't delay. Set up a time to meet with a Farm Credit Illinois agent today. If you haven't already reported your 2020 corn and soybean production to your agent, April 29th is the deadline for reporting. Your crop insurance agent can help you work through the production report during the renewal process, which will save you time so your focus can be on planting crops in the spring. Depending on where you are in the state, the earliest plant date on corn is April 1st or April 5th, and for soybeans it's either April 15th or April 20th. Contact your local Farm Credit Illinois agent to decide which dates apply to the counties that you farm in.
Crop insurance is complex and ever-changing. You need an expert who can help you navigate it all successfully. With Farm Credit Illinois Crop Insurance, you don't entrust your operation to just one individual. You engage with a 37-member network of experts driven exclusively to helping farm families succeed with customized risk management protection. Each of FCI's 28 agents ask questions and listen to truly understand each unique farm business, recommending an appropriate mix of coverage to fit every budget and business goal. Behind the scenes, underwriters, processors, and support staff empower agents with knowledge and service policies with the highest level of accuracy. The team culture cultivates specialization and promotes knowledge sharing, all with the farmer's best interest at the forefront. When you leverage FCI's network of crop insurance expertise, you can be assured that crop insurance recommendations center around your needs. FCI's crop insurance agents deliver a distinct advantage, offering customized products and services to protect your farm and family.